Fiscal stimulus uncertainty continues to dominate the headlines and move the markets. Peter Hugg, Global Trading Director of Kitco Metals, joins us today to talk about his metals forecast for the remainder of the year. Peter, it seems like every time we speak, there has been some progress made with the fiscal stimulus front, and then it's been taken away, back and forth, back and forth. What's the latest from this week?
Well, when the week started, it looked like they were going to get a deal together, and it was impressive. Gold got up through 1850, got as high almost as 1880 at the beginning of the week, and then I don't know what else to call them, but these idiots in Washington just can't seem to get it together. Even though it's absolutely crucial, we get a bridge here until the vaccine takes hold. And as of this morning, they're still apart on two major issues, and my understanding is the Democrats have taken the weekend and they're not back till Tuesday. So, the fact that the stimulus is now in question, again, I find it absurd, but the fact that it's in question has, created some weakness in the metals through the balance of this week. Gold broke down below 1850 and is just sort of nudging up against it again. So until we get this fiscal stimulus package done, the market is sort of sideways. But my tone is still constructive for next week. I think they will get something done. They don't have a choice. And given the other news this morning that Boris Johnson came out with, that the UK is likely to go through with Brexit without a trade deal with the EU, could also create some issues in the new year. So again, the macro picture, in my opinion, continues to be bullish for the metals, but in the short term, there is some volatility.
I was asking you offline whether or not they're going to wait until the Georgia runoffs to have some sort of conclusive deal. Maybe they're just waiting.
Well, they might, but again, even if let's assume the Democrats win both those seats, there's nothing Biden can do until he becomes sworn in on the 21st. So I'm not sure that accelerates any process. If anything, it might anger the Republicans even more and make them even more recalcitrant in putting a deal together with the Democrats.
Yeah.
So I don't think that's the catalyst that gets this deal done. I think it's pressure from the public on their elected officials. There is some serious issues coming up within a week on people that have had a rent moratorium, and on the unemployment side, they need to get a bridge here until this vaccine is going to take effect. And that I think that is at least a 3 to 6 month process before the vaccine is going to be distributed in quantities sufficient to stem this pandemic. And I'm just amazed that the government is not able to come together and do something.
I should bring up also that U.S. jobless claims rose to 3-month highs. So what is the fiscal stimulus package that you're looking for, where you would like to see that could help Americans at this time?
Well, I think, other than the states and the municipal governments that are basically mired in debt now because of the lost tax revenue, that's something I think that can wait. They can run their local budget deficits, as needed until until the economy rejigs itself. But for small businesses and for people that are on unemployment that is expiring within the next week, funds are absolutely crucial. I mean, people are not being able to pay rent because of the new surge in COVID related cases. Businesses in a variety of states, large states like California, they're shutting down. Now, these businesses, if they don't get relief, are going to go out of business. So, for them to come back then and then to rehire is going to be a much, much more difficult process. So giving them some relief so they can pay at least their workers and keep them on board. So when this economy does reopen, they'll have the staff and they'll still have a business to open to move forward is absolutely crucial.
Yeah.
So without this stimulus, I mean, these businesses folding and then people maybe being more permanently unemployed. is going to be a serious issue for the economy. Again, I mean, just mind blowing to me that that both the Democrats and the Republicans can't come together on this.
The equities markets have reacted, well, I guess negatively, if you want to call it negatively, but it's been trending down this week. Hasn't been huge moves, but it's been trending down this week. I would have expected to go down more considering the stimulus gridlock and the economic troubles that we just discussed.
Fair point, but if you look at the equity market, you could buy the index and you'd be doing okay. But not all stocks are moving in the same direction. I mean, there are certain sectors that are doing extremely well. I mean, I don't know if you saw the Airbnb IPO yesterday. Went up to $160. I think the issue price was 40, if I remember right. So the people, the disconnect between Wall Street and Main Street is enormous. So the people that have the money that are in the equity market and are in the right sectors are doing extremely well. Main Street is getting hammered. So the disconnect between the rich and the poor is just accelerated, and that gap is widening. So that the poor guy on the street, he's not experiencing the growth in wealth that the upper middle class and rich are experiencing in the equity market. So yeah, the broad market looks higher. Individual stocks are where you need to play the equity market. It's not just a broad-based recovery. And again, if we don't get a stimulus package and this economy slows down again, and we can't get this pandemic under control, stocks that have on the anticipation of the economy open, i.e. airline stocks, cruise lines, Disney, places like that, Disney parks specifically, are going to have an issue in 2021 from an earnings perspective.
Let's go back to gold now. Let's take this scenario that you just discussed. Suppose that we don't get a fiscal stimulus package in time and some of these stocks fall and we see more volatility in the equities markets. Would that be positive or negative for gold? Because keep in mind, this scenario depends on fiscal stimulus not happening, and we need fiscal stimulus for gold to rise further.
Well, I think the macro picture, the stimulus is obviously very important for the general population, but from a macro perspective, I think the central banks, both in North America and in Europe, add Japan to it as well, will continue to be extremely accommodative and do whatever they need to do to try to keep the economy afloat. So in that context, it's positive for gold. Where I have a possible issue with the metals is if we get a significant downturn in risk assets, i.e. sort of a March of this year, the short-term prospects for the metals could be negative as people raise cash. So that is a possibility. From a technical perspective, the other issue that might come up between now and the end of the year, it's an outlier, but it's possible. If people are concerned when Biden gets in that he will be early on his initiative to raise capital gains taxes and income taxes, I personally don't believe that will happen until 2022, if then. But if he does come early, and that's the perception, there is still a lot of value, a lot of profit in the gold and silver trade for people that got in at the beginning of this year. And for larger clients that have the ability of doing this type of tax transaction, I could see some tax loss selling in gold and silver to lock in your capital gains under this capital gain structure tax year in anticipation of capital gains rates going higher next year. So you may see some tax loss selling from a capital gains perspective to lock in capital gains in the 2020 tax year. That's an outlier. It's possible, but that could create some weakness coming into year end.
Yeah. You were right, actually, last week, or, you've been saying this for quite a few times in the last couple of weeks, that gold would be hitting a bottom. It bounced off its support level. Now it's having a hard time breaching the 1850 resistance level. What's it going to take to breach that level?
Yeah, we got through 1850 late last week, early Monday morning. and went up through, almost got up to about 1875. Then with the stimulus talk starting to stall, it dropped lower. It's bouncing up against 1850 this morning. It's a Friday, so I don't expect the traders to go into this weekend short. So I would anticipate 1850 gets taken out next week, and it's still possible, in my opinion, to see before Christmas to see the 1925 level tested.
It's interesting. I'm going to share with you our Kitco weekly survey here. Wall Street is more bearish this week than bullish. So 33% of the Wall Street pros surveyed were bullish, 40% bearish, 27% neutral. Main Street, bullish, 54%, bearish, 28%, neutral, 17%. So the Main Street investors are a little more bullish than the Wall Street pros.
Mm-hmm.
Which camp are you in? Well, you see 1920, so I'm guessing you're with the retailers.
I'm constructive this market. I'm not discounting the fact that we won't see an 1825 tomorrow next week, but my overall perspective for next week is I think this market moves higher coming into Christmas, and I'm still looking for 1925 to get tested before this year's out.
Perfect. Peter Hugg, thanks very much for your updates.
You're welcome.
Stay tuned for more on Kitco news, and don't forget to subscribe and be a part of the action by participating in our weekly survey every week at the end of the week. I'm David Lin.